Ladies and gentlemen, good day, and welcome to the Tube Investments Q1FY27 earnings call, hosted by IIFL Capital Services Limited. All participants are currently in listen-only mode. There will be an opportunity to ask questions following the conclusion of the management's opening remarks. Please note that this conference is being recorded. I now hand the conference over to Mr. Joseph George from IIFL Capital. Thank you, and over to you, sir.
Thank you, Swapnil. On behalf of IIFL Capital, I welcome you all to the 1QFY27 results conference call of Tube Investments of India Limited. From the management, we have with us Mr. M.A.M. Arunachalam, Executive Chairman, Mr. Mukesh Ahuja, Managing Director, Mr. A.N. Mayappan, Chief Financial Officer, as well as all the divisional heads. I will now hand over the call to the management for opening remarks, post which we will have Q&A.
Yeah, good morning, everyone. Just to give a commentary on this quarter result, the Board of Directors of Tube Investment of India Limited met on 14th August 2026 and approved the financial results for the quarter ended 30th June 2026. Standalone results for the quarter. Revenue in quarter one was at 2,366 crore against 2,007 crores in the same previous year. PBT was at 213 crore against 2,222 crores in the same period previous year. ROIC annualized stood at 41% for the quarter ended 30th June 2026 compared with 39% in the previous year same period. Free cash flow for the quarter was 174 crore. Now I'll give the segmental review. The engineering revenue for the quarter was 1,566 crores compared with 1,298 crores in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was rupees 153 crore, which is same as the corresponding quarter of the previous year. Metal formed product revenue for the quarter was 408 crore compared with 366 crore in the corresponding quarter for the previous year. Profit before interest and tax for the quarter was rupees 28 crore as against 37 crores in the corresponding quarter of the previous year. Mobility revenue for the quarter was 250 crore compared with 198 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 9 crore against 7 crore in the corresponding quarter for the previous year. For others, revenue for the quarter was 256 crore compared with 236 crore in the corresponding quarter of the previous year. Profit before interest and tax for the quarter was 21 crore against 17 crore in the corresponding quarter of the previous year. TI consolidated revenue for the quarter was 6,215 crore against 5,309 crore in the corresponding quarter of the previous year. The profit before share of profit for JVs, exceptional items and tax for the quarter was 461 crore against 449 crore in the corresponding quarter of the previous year. CG Power and Industrial Solution, a subsidiary in which company holds 56.29% stake, registered a consolidated revenue of 3,281 crore during the quarter against 2,878 crore in the corresponding quarter of the previous year. Profit before tax for the quarter was 423 against 364 crore in the corresponding quarter of the previous year. Shanti Gas Limited, a subsidiary company in the gas business in which company holds 70.46% stake, registered a revenue of 115 crore during the quarter against 135 crore in the corresponding quarter of the previous year. Profit before tax for the quarter was rupees 14 crore against 31 crore in the corresponding quarter of the previous year. Thank you, and we are happy to take questions.
Thank you so much, sir. Ladies and gentlemen, we will now begin with the question and answer session. Anyone who wishes to ask a question may click on the raise hand icon from the participants tab on your screen. We'll wait until we have the question queue assembled. Requesting participants to please click on the raise hand icon from the participants tab on your screen. We'll wait until we have the questions in queue. We'll take a question now from Joseph George of IIFL Capital. Joseph, please go ahead.
Hi. So I have two, three questions. One is, if I look at the standalone performance, we have seen some pressure on margins, because of which the EBIT growth in the engineering segment and the metal form segment was relatively muted. What I wanted to check is that in the last couple of quarters, we have seen a lot of inflation. All OEMs and suppliers are talking about inflation. So in that context, is there any price hikes that have yet to come from your customers, because of which we have seen a compression in margins, or is the profitability in the quarter reflecting the underlying business dynamics?
Yeah, thank you, Joseph, for your question. Joseph, as you are already aware of, there was a lot of commodity steel price increases happened in the Q4 and Q1, which has resulted into the lower margins. But basically, you are aware that TI maybe gets those price increases with a lag of sometimes 2 or 3 quarters. So we are confident on the steel price increase particularly, we'll be able to recover fully, and you'll see the margin neutralization will happen in the coming quarters.
Sure, sir. Would it be possible to quantify the extent of under recovery in the quarter, so that we can think of, or we can estimate what sustainable margin each of the segments is?
So I would not like to give particular number. Maybe like we have given a guidance, we'll be able to grow a bit margin in the double digit, and post the price recovery, we are confident that double digit margin improvement will keep happening in the future also.
Sir, understood. Thank you.
Thank you so much, Joseph. We'll take our next question now from Devesh Kayal of Boring AMC. Devesh, please go ahead.
Yeah, hi. So just my question is on the TI medical part. So we have mentioned in the annual report that the plant is running at full capacity, and we did one acquisition in March 26. So just want to understand, how do we see this business from a 3 to 5 year perspective. So we did around 200 crores revenue. So can it be a 3 to 5x business over the next 3 to 5 years? Yeah.
Yeah, thank you, Devesh, for the question. Just to give a overall view of the TI medical business, like there is a core business, which is basically a surgical business, which we are doing it. In the Q1, we had a growth of almost close to 20% in that particular business. And second, maybe to grow business, maybe we have done a very small acquisition in the IV cannula, which is basically maybe, infusion therapy. These IV cannulas are used, and we are expecting that business to start giving us revenue from this quarter onwards, maybe basically August or September. This plant will start, and we'll start clocking the revenue for that. Overall basis for TI Medical, as we said in the previous calls, we are confident to do 20% revenue growth year on year, along with the profitability. But however, this Medicura business, what we have just required, may take some time maybe to do the customer acquisition as well as on the margin side. But the core business, we are confident the revenue growth and the profitability will continue in double digits.
Understood. And so on this CDMO 3x, if you can also give some color, because I understand like we are setting up 200 KL reactor capacity. So if you can also, what's the trajectory there?
Govind is there on the call? Govindji, you are there on the call?
I'm here with the brief. Yeah. So the 200 KL intermediate capacity is the commissioning has already happened. The validation batches are going on. The clean room is expected to get commissioned in the next 30 to 40 days. And meanwhile, while the commercial facility is getting commissioned, The semi-commercial facility, the validation batches will be supplied to the customer for triggering their PAS filing, which can trigger the inspection to the site, should happen in the next 45 days. So in terms of the product will move to the customer. After that, they have to take their EV batch, their batches, and then they will wait for the stability and file that will trigger the inspection. So we expect the inspection to happen during the next financial year. And we are on track in terms of, like, I think, to achieve the numbers, whatever we had, really-based numbers, whatever we had projected, we are on track in terms of achieving that as of now.
Understood. So with this business, after the inspection next financial year, it would be on a growth trajectory.
Yes, sir. Currently, we are already supplying products to certain customer. Example, our semi-commercial plant, we're already supplying commercial quantities for a OTC product which has been launched in Europe, and the customer is likely to take the product for the global requirement. We also supplied a key intermediate to one of the customers for their filing as well. So those work are going on. At any given time, we have around 15 customers who are working with us, both for FTA, FFS, as well as certain projects which would be supplied from the semi-commercial plant in Hyderabad.
Understood. And sir, we haven't mentioned anything on the electronics piece in our annual report. And so just want to understand what's happening on the lenses side.
Basically, your question is on TOS?
Yeah, right.
So maybe that business, maybe like we shared the previous call, we are yet to make the inroads in that particularly, but we are continuing that business to get inroads into customer approvals for the export business, because in the domestic market, basically this lens modules and the camera modules manufacturing is yet to start. So bottom line is we yet to make inroads on that business.
Understood. That's it from my side.
Thank you, Devesh. We are taking a next question now from Salil Desai of Marcellus Investment Managers. Salil, please unmute your microphone.
Thanks. Hi. My first question is, follow-up to what Joseph was asking on this price lag of steel price increases. What you mean, your answer, just to clarify, means that you will also recover what you lost in Q1, right? So it's not just that there is a lag on just passing on the cost hike. You also recover cumulatively what has been the under recovery. Is that a fair understanding?
Yeah, that assumption is right. For steel prices particularly, including Q1, we'll be able to recover fully.
Okay, all right. My second question is, again, on the standalone business. Now, the MFP, after a long time, we have seen almost about 11.5% growth in revenues. So if you can tell us, what has changed here. Last couple of times you mentioned railways was a drag. If you can give an indication of what has changed on the MFP segment this quarter.
So there are a couple of reasons there. Like you mentioned, that railway is a drag. There is no doubt on that. While automobile industry has done pretty well, particularly Hyundai, where one of our business unit is purely depends on them, and maybe let's say has not done well. So that is maybe also for this particular quarter, there was a drag on that. And rest of the two units, actually, we are maybe, like you are aware, we have declared to do a greenfield plant launch in the western region that is running delayed by 6 months. So capacity maybe in terms of expansion, whatever growth was there. So we are having a lag of 6 months to catch up on that. These all submission put together, there was a pressure on the revenue in the MFP division.
Okay, no, I was actually saying that this seems to be better than what you've done in the last few quarters. So if this was volume led or something else?
So volume led only, because price recovery is yet to take place. Exactly. It's all well. Volume led in the particularly two businesses other than railways and the Hyundai business.
Okay. Understood. Thanks for clarifying. The next two questions I have on our e-mobility business. So one is, our your negative EBIT in the segment has come off by almost about, I think, 40-50 crores in this quarter. So, which particular product or segment has this happened? What have been the overall broader drivers of loss reduction?
Yeah. So thanks, Salil. This is Jalaj. So, quarter one has been a very good quarter for us. We have recorded a highest ever turnover of close to 240 crore. And I will say that out of all the four businesses, we are seeing traction in all four of them. When you look at the truck business, which is the HCV business, the momentum is continued from the quarter four. When it comes to the small commercial vehicle business, we have recorded highest ever volumes in any quarter in the quarter one. And, even including the three-wheeler business, if you recall, in quarter four, we had reported there were some challenges on one of the supply side, which impacted our production volume. All those challenges are behind us now. And quarter one recorded almost a 64% kind of a improvement over quarter four volume. So the overall volumes being good, and your observation regarding the margins is also correct. So I will say all the businesses are now seeing traction in terms of their volumes, and because the volumes are increasing, although yes, there is a headwind of the inflationary pressure or the commodity pressure, including the sell prices, but we've been able to post a decent, I'll say, performance, if not a very good performance.
All right, thanks. So just to be sure, there's nothing in one-off, no benefit this quarter. This is a regular routine volume growth that is driving the margins.
Yes.
Oh, great. And lastly, if you can share, volumes for each of these products for the quarter.
Yeah. So the billing volumes, the big trucks was 86 numbers. The three-wheeler business was 1924. The small commercial vehicle was 347, and tractor was 22 numbers.
Okay. Great, Jalaj. Thank you so much.
Thank you, Salil. We'll take our next question now. We have Prithvi Raj Irle of Unifi Capital. Prithvi, please unmute your microphone and go ahead.
Yeah. So my first question is on EV business. It's good to see finally some traction there. Given what we are seeing at this point, is it fair to assume that we are behind the peak quarterly losses for this particular segment?
Can you just repeat, Prithvi? Can you just please repeat your question again?
Are we behind the peak losses for the EV business at this point of time? And do you also have any timelines for break even?
Yeah. So, Prithvi, directionally, yes. Directionally, as we see our volumes increasing quarter and quarter, your first statement regarding us, behind or us beyond the peak losses for a quarter is a correct one. Directionally, what you're saying is correct. That's what the endeavor would be. And your second question was, can you just repeat the second question again?
Prithvi, you're on mute right now.
Yeah. On the break-even timeline for the EV business.
So, Prithvi, this will vary from business to business. There are some business which will break even early. So, and there are some businesses which will go into the break even later. We are expecting one of our business to break even this year, and maybe two of them to break even next financial year.
Okay, that's clear. And on the engineering side, is it possible to share the volume growth during the quarter?
So volume grew about 17%.
Oh, okay, got it. Thanks. That's all from my side.
Thank you, Prithvi. Requesting participants, if you wish to ask a question, please click on the raise hand icon from the participants tab on your screen. We'll take another question now. We have Joseph George again with his question. Joseph, please unmute.
Yes, I had a couple of questions. One is on the EV side, the volumes that you have given, especially on the three-wheeler side. We track, volumes of registrations on the Vahan website. And what I noticed is that the wholesale volume that you have given is, somewhat higher than the retail registrations that we are seeing. Is it that things have picked up substantially over the last 1 or 2 months, and as a result, in anticipation, you have wholesaled more, and that's something that we will see in the registrations data in the coming quarter or so?
Yeah. So, Joseph, thanks for the question. See, there is always a lag between the billing and the Vahan, but over a period of time, the two tend to match. So, since you specifically mentioned three-wheeler business, so let's say last financial year, our billing was about 6,700, and our Vahan registration was about 6,500, right? Specifically to quarter one, if you recall, we reported that there was some production link challenge in quarter one. Consequently, our billing in quarter four was only 1,200 numbers, as compared to quarter one was 1924 numbers. So, in a growing business, right, specifically, let's say in Q1, our opening pendency for Vahan would always be lesser than the closing pendency for Vahan. So maybe that's the other part of it. But over a period of 3 to 4 months, max 6 months, the numbers always tally between the Vahan and the primary or the billing numbers which we declare. But usually there is a time lag of at least 30 to 45 days between billing and Vahan.
Understood, sir. That's very clear. The second question that I had was, when we think about FY27, or rather, when we looked at FY26, there was some, investments that has gone out from the standalone entity into some of these new ventures, subsidiaries, etc. When we think about FY27, what is the amount that you have allocated in terms of cash flow from the standalone entity into some of these subsidiaries, if that has been budgeted for already?
So, Joseph, like we shared in the previous calls also, we have already infused 250 crore in the last quarter, maybe basically Q4 of the last financial year. And we anticipate maybe in Q3, we will infuse another 250 crores. We have given a guidance of total put together about 750 crore infusion will happen over a period of time. So, second tranche of that will happen in Q3.
Understood, sir. Thank you. That's all I had.
Thank you, Joseph. We have another question coming in from Anupam Gupta of HDFC. Anupam, please go ahead.
Yeah, morning, sir. Can you hear me?
Yes, Anupam.
Yes,
Please go ahead.
morning.
Yeah. So a few questions. Firstly, on the core business, both engineering and metal form, you said specifically that steel you will be able to recover. But so let's say other costs which you had mentioned in the last call, that there are other costs which are higher because of the West Asia crisis. How are you able to manage that, and when do you think that will normalize for you?
So, Anupam, this quantum of increase, it is happening up maybe first time. We have already taken up with all our customers. So as of now, we are in the verge of discussions with all the OEMs to recover, which is a non-steel inflation, which is basically fuel, freight, extra. So maybe we'll let you know maybe another quarter down the line time how those conversations are going on. But we are hopeful majority of that will be able to recover as on this moment.
Okay, so basically you should, both for engineering and metal form, you should revert to your older margin levels which you were seeing in last year.
Yes, please.
Okay. And second question is basically on the cycles business. We have seen a very strong growth in this quarter. In fact, it has been happening for last few quarters that you have been recovering, and your margins also have recovered quite a bit here. So if you can just give a sense of what's driving the improvement and how sustainable that is.
So, Anupam, you are aware of that. Basically, quarter one of every financial year, it is very good for the cycle business, particularly because schools will be opening it, colleges will be opening it, and which maybe I'm happy to state, maybe we have encashed those growths fully, rather we have improved our even share of business. And that's what is resulted into a margin expansion in that particular business. So we are hopeful, like we shared, maybe at least another 2 basis point in the cycle business will be able to improve margin for the overall year, current financial year.
Anupam, you're on mute right now. Sorry, Anupam, please unmute your microphone.
Sorry. So when you said 2 basis point, basically you're saying 5 percentage point for the cycles business. That is what the target margins are.
As of now, yes, but we are further working it how to improve beyond that.
Okay, understood. And so one question on Orange Koi, which you have mentioned in your notes, that is part of which segment in the reported results, and what do you plan for that business?
Anupam, right now it is part of other segment.
Okay, and what is
It's very small right now. It's part. Sorry.
Okay, what is the plan for the next few years? Do you plan to scale it up, or what? How do you look at that business?
So, Anupam, there's a very small business which we have acquired. Basically, it's a step towards additive manufacturing, which is metal injection molding. So, there's a small startup which we have acquired to develop the capability, and going forward, we'll be scaling it up. So, first 1 or 2 quarters, we would like to study what market and what segments we want to play. And maybe I think 2 quarters down the line, we'll give you guidance on this business also.
Oh, sir. And just one last question. CDMO also is part of other segment, or is it part of medical?
Yeah, it is part of others only.
Okay, fine. Thank you.
Thank you, Anupam. We request participants, if you wish to ask a question, please click on the raise hand icon. We have a follow-up question coming in from Salil Desai from Marcellus Investment. Salil, please go ahead.
Thanks. Yeah, my question again is on the EV segment, right? And this is specifically related to Jayam. Now, this I understand is largely a services business, but yet, at EBIT level, we have a negative number in this for the whole of FY26, although revenue growth has been pretty solid at 30-35%. So, what's happening here? What's the outlook? If you can give some more details.
Yeah, so JM has now, there has been some headwinds which JM has been facing when it comes to design and development, which has been the core business for JM. However, the outlook looks good because JM has now diversified into battery manufacturing, which has a good potential going forward. So in this financial year, they have a battery assembly line set up. So going forward, apart from the core business of design and development and fast prototyping, validation and testing, these 2 were the core business for JM. We will see a third revenue generation stream of battery business also coming in. So the outlook for JM for top line as well as the bottom line looks positive.
And these batteries are for, is in the group's consumption, or this is going to be a commercial factory?
Yeah, to start with, because they are in the process of ramping up, they would be for in-house consumption, primarily for the small commercial vehicle business and 3-wheeler business. However, over a period of time, as they expand in capacity, etc., the JM would be, selling it outside to any other EV player as well.
Okay, thanks. Secondly, maybe Mukesh, you can answer this. Is for the group as a whole, what is if you leave out CG Power, what are your capex commitments currently, and what are the timelines in terms of those coming on stream?
One second, Sal. Okay, CG Power. Yeah. See, I can just tell you this. In TI, we are planning around 350 crores of plan for the current financial year. And Shanti year will be around 100 crores. And if you take group as a whole, if you see something like 600 to 700 crores. This question was particularly in CG Power. Yes. So
No, I said if you leave out CG Power, so other than CG Power, where the
leaving CG
question-
Power. Yes.
okay.
Right. And these numbers, these are part of specific projects. If you can just give some light on where you are spending money and by when those individual projects get completed.
So in core business, basically the money will be going towards the engineering division and an MFPD division, and rest maybe money will be going in basically TI Medical and 3xper CDMO business.
Okay, thank you.
Salil, do you have any more questions?
No, I'm done. Thanks.
Thank you, Salil. We have a question coming in from Harshvardhan Kothari. Harshvardhan, please unmute your microphone and go ahead. Sorry, would you like to try it one more time? We are unable to hear you. Harshvardhan, please unmute your microphone and go ahead with your question. We don't have a response from Harshvardhan. We'll take our next question now. We have Ketan Sangvi. Ketan, please go ahead.
I just wanted to get some clarity on the external investors that we have in TI Clean Mobility. So when is the conversion likely to happen? And could you give me a sense of what's the broad stake they're likely to end up at post the conversion? That's it. Thank you.
Yeah, this is Mayappan here. See, actually, we have three investors over there. External investors are there. They have invested in a CCPS. The conversion happens only at the time of IPO. IPO, we have a time, and there is no fixed timeline for this. And whenever once the market is there, and once we start selling more and revenue start coming up, and once the profitability comes, we'll go to the market for IPO. At that point, it will get converted. And another question which you asked, what will be the stake at that point in time? That will be decided based upon the market. That is at that point in time, whatever the valuation which we are going to get, that point in time, it will get decided.
Okay. Thank you so much.
Yeah. Thank you.
Thank you, Ketan. We request participants, if you wish to ask a question, please click on the raise hand icon from the participants tab. We have another follow-up question here. We have Prithviraj Irle again with Unify Capital. Prithviraj, please go ahead.
Yeah. This is just a follow-up question on the engineering segment. You had a very strong growth of 17% volume. So how is the demand environment now? Are you seeing similar momentum to continue? Also, could you explain, how exports are shaping up?
So it's a good question. Maybe I can just how the markets will turn out. I think it is beyond anybody's imagination. But at least for next 1 or 2 quarters, we feel it is going to be bullish. And exports also has done pretty well in particularly Q1. And where also is a growth of more than good double-digit growth has happened in the exports also. And we expect that momentum to continue. Reasons other than beyond our control, like geopolitical situation can maybe put a hurdle. Otherwise, customer relationship and the new product development, whatever we've done, all things are intact.
Currently, how much is exports as a percentage of revenue?
At a TI level, it is about 14%.
Okay. And on the domestic demand, which are the segments that are contributing to the strong demand?
I think across maybe Q1 was a very, very bullish quarter. Across the segments, across the vehicle categories, I think there was a strong momentum. Maybe only I think Hyundai was not able to contribute, which I'm pretty sure they're working on new model developments. That also will. But across the segments and geography, demand was pretty good.
Thank you. That's all from my side.
Thank you, Prithvi. We have Mr. Harshvardhan Kothari back. We'll allow him. Mr. Kothari, please unmute your microphone.
Am I audible right now?
Yes, we can hear you.
Thank you, sir. So I've got a couple of questions with respect to TI Clean Mobility. So recently, we have exported our first consignment of 3-wheeler autos to Nepal and a few other African countries. Could you please give me some color on that? How was the volume? What was the first consignment like for the volume?
Yeah. So thanks, Harshvardhan. So Harshvardhan, right now, what the markets we are exploring is India-like market, which is Nepal and Sri Lanka, and B, some of the African countries like Tanzania and Ethiopia. However, Tanzania and Ethiopia and the African market are more at an exploratory stage right now. Where we have truly made a breakthrough is Nepal market, where you would have picked up from the news as well that we have exported our consignment in Nepal. About 100 plus is the unit which have been shipped or in the process of getting shipped to Nepal, and initial product feedback is very positive, and we are very bullish on Nepal as a country going forward. So this is what we can share at this point of time.
Okay, thank you. My second question, as just got highlighted a few moments back about the rising cell demand globally, and there have been bottlenecks for acquiring the same. So, how are we positioned for that?
Yeah, yes, you are. It's a genuine challenge which we are grappling with, and has been one of the challenge for us in Q1, and going forward at least for 2-3 quarters we see this as a challenge, because there used to be some tax exemption which some of the cell manufacturers used to enjoy from the Chinese government, which we see that over a period of next 2-3 quarters will get lifted. So we are anticipating the sale prices to go down. However, in light of what's happening across the world, and also growing demand for BESS business, which is battery energy storage system, we are seeing some challenges on the sell prices. However, in our case, what we are relying is in terms of pre-booking some of the orders for with long lead time items, and locking the prices with the cell and the battery manufacturers. However, these are all the mitigating step that we are doing, but directionally, these cell prices are not looking like to cool down, at least in this quarter or even in Q3 as well.
Okay, okay. And so, regarding our heavy commercial vehicle portfolio, what is our order book visibility for tippers?
So tippers, we introduced in Q1 in the market, and what we offer is a 28-ton tipper. The market seems to be shifting more towards 35-ton and higher category of tipper, which we are contemplating, developing for our product portfolio. As far as the existing tippers are concerned, we have sold about 20-25 numbers of tippers, and the initial feedback is positive. Also, keeping in view the order book which we have for some of the other products, where we have a confirmed order book, and given the kind of challenges which we had on the supply chain, including that of cell, right now the focus is more to service that particular order book, which is for 4x2 tractor trailer, while continuing to seed in more volumes of our tipper, which will lead us, which will hopefully give us bulk deals, and then probably we'll start producing and selling them as well.
Okay, so another question on HCV side. So it was previously indicated that we have some good inquiries coming in from ports. So any new deployments over there?
So Welspun at Anjar port in Gujarat, and Welspun, there have been vehicles. There are about 22 trucks which are deployed there, which carry Welspun material to the port and from port back to Welspun. That is one big number that I'm talking about. There have been other single digit truck deployment which has happened at Vizag port, and I think even in Chennai port as well. But and there are 2-3 others which we are talking about in terms of the port. One big deal which you would have picked up from the news as well, which is for the Wonder Cement as well as for the Wonder Cement. There we are touching two ports, Tuna Port and Dahej as well. So, those are the other ones which are touching the ports and bringing in coal from those particular port.
Okay. And one more last question. We had previously indicated that we'll be introducing L3 autos in the market. So any update on that?
So we have done that. We have, but it's a partial kind of a seeding and testing. So we have introduced L3 products in Q1, but in the select markets of UP and Bihar, we are testing those particular vehicles in these markets, and basis the feedback that we get from these markets, we will take a call forward on L3 as a product.
Okay. And how is the NCR commercial vehicle modernization drive gaining traction, sir?
So by law, you mean to say with respect to the EV policy which NCR has declared?
Yes.
Yes. So we are increasingly seeing more and more traction gaining into, when it comes to NCR market, not only for us, for the entire industry of EV. In, let's say, couple of months from now, once this becomes mandatory, we will see huge traction, gaining into NCR. And we are also ramping up our ability in NCR to service the demand, be it in terms of dealer appointment or their secondary footprints across the NCR.
Okay. Thank you, sir. Thank you so much.
Thank you.
Thank you so much. Since there are no more questions in the queue, we'll take that as the last question. On behalf of IIFL Capital Services Limited, that concludes today's conference call. Thank you for joining us, and you may now click on the leave icon to exit the meeting. Thank you all for your participation.
Thank you.
Thank you.
Thank you.